we'll talk more about food in 5 minutes from now because Gurmeet is with us.
I was just thinking, I'm so glad Zomato has replaced that 10-minute food delivery with this. It used to give me so much anxiety thinking that how much time will they take to cook it if they deliver it in just 10 minutes, right? So I think that was a plan that needed to be shelved, and I'm glad for the consumer's sake that has happened.
Absolutely. Rajat Bhattacharya is with us, Senior Investment Strategist at Standard Chartered. Rajat, good to have you with us here. Thanks very much. Quick thoughts, Rajat, on whether the U.S. equities have more downside. Many believe they do. I mean, we had a call from CLSA earlier today. Their year-end target in the S&P is 4,000. In between, of course, they're expecting sharp swoons, etc. What is your sense?
Hi, morning, Prashant. Yes, this is what we've been talking about when we last met, right? So there was a clear sign that the Fed is probably going to hike further, and what we saw in the last 2 weeks is more strength in the U.S. economy. So you started with the CPI data, the services sector PMIs, and then the retail sales, all beat expectations. So what has happened really is that all that talk about the recession, early this year, that has been pushed back. So, if data is what we go by, and we can see more of the inflation data coming through today with the PCE inflation, if they are still elevated, then the Fed has more work to do, right? So as a result, there is more probably downside in the U.S. markets. Now, what does that mean? Basically, you need to see the data, the job data, especially next week's non-farm payrolls is a key one, and we need to see that job market slowing. That is the first thing that Fed needs to watch, and underlying that is the wages inflation. That needs to peak before the Fed even pauses. So we need to watch those data very closely.
Okay. The big question back home here in India, of course, is there more downside for the Indian markets, right? I mean, when rates are moving higher, when inflation is high, growth is slowing down, there's a possibility of a recession. What should you be doing with your portfolio here? Should you raise cash levels? Should you stay defensive? What's the best approach?
Yeah, we're overall defensive as we've been highlighting for the last few months in terms of the risk on, risk off. We have been risk off for a few months now, and that would be the position in India. But I must say that in India, it's a great time to buy bonds, and that is what it's overlooked almost, because where the RBI is, maybe there is one more hike or maybe not. I mean, it's close to that peak, and where the rates are, real rates are positive in India, and if the RBI peaks, then it's a great time to add bonds. So that's what we're saying in globally as well, and in India. Bonds are priority right now. So anyone looking to put new money should be looking at the fixed income sector.
Hi, Rajat, you're sounding fairly cautious. Defensive bonds, what about equities then? You said there could be some more downside to US equities. You want to quantify that? What kind of a fall, could we probably see in the mother market? And what about the Indian markets? We've been underperformers, unfortunately, in 2023. Hopefully, we catch up soon. What's the downside there? Yeah,
the US market, Nigel, let's say the key level was that 4,100 for the S&P 500. It's been range trading around that 4,100 to 4,200. It fell below 41, but now it's just below 4,000. Again, bounced back yesterday. So that 4,000 to 4,100 is now the key level to watch. If it falls below that, we could see further 3 to 5% downside, and again depends on largely on the non-farm payrolls data next week, which will again decide what the Fed does in March. Are they going to go for a 25 basis points? We see increasing signs, increasing talk about even a 50 basis points hike if the non-farm payrolls are pretty strong. About your Indian stocks, they have a close link with what's going on in the risk sentiment worldwide. As I said, I mean, there's probably, we anticipated that Indian markets will not perform as well as the rest of Asian markets, and that underperforms might continue for a while given the excess valuations. But longer term, I mean, these are the levels. If anybody is underweight on India, they should be using any downside to average in continue to average in, because the long-term story of India's earnings growth, GDP growth, all remains intact, and which is why you still see Indian equities trading at a high premium, I repeat, versus Asian stocks versus global stocks.
Okay, Rajat, we will let you go on that note. So got that loud and clear that anyone looking to put new money should be looking at fixed income, and equities maybe is not the place to be, especially this year. Thanks a lot for joining in. Hopefully that changes, at least for the equity market participants.